Hey everyone, Coach Investor back to another video for today. So we're back talking about another mega cap company, in this case Alphabet, more familiarly with you maybe, Google. So Google, if it's a mega cap, obviously there's a list of huge mega cap companies that have come down significantly from their highs. Excluding, I would say, Microsoft and Apple, all the rest took a huge beating. And there is good reason for that. With the likes of Google and Facebook or Meta, obviously, because of the down cycle in advertising spending, those companies have taken a hit. Meta, of course, with their investment in Reality Labs, the metaverse, huge expenses there. They took a hit because of that as well. But Google, as a company for the future, I mean, can you go wrong with picking up shares of Alphabet today? In my opinion, probably not. I'm going to point out a couple of crucial points from their last earnings report. Again, some news with regards to TikTok, and then we're going to have a look at the graph at the end of this video. If you enjoy this type of videos, do leave it a thumbs up. Subscribe if you have not. I would really appreciate that. And if you want to support me and this channel, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. So for those that need a quick reminder, revenue increased 6% year over year to just over $69 billion, or 11% on a constant currency basis, which, by the way, is going to be a huge tailwind in the coming quarters if things stays as they are today, because the US dollar became a bit weaker, well, actually much weaker since that CPI report came out. And for all the companies that, well, said that this was a huge headwind, that the US dollar is so strong, this will be a big tailwind in the coming quarters. So keep that in mind. For all of those companies that gave us guidance, maybe this is going to boost the next quarter. Then we obviously had, well, operating income that decreased year over year. Operating margin decreased as well from 32% to 25%. Net income, same story there. We went from close to $19 billion to close to $14 billion. Diluted earnings per share from $1.40 to just over $1. Now, if we scroll down, we can obviously see that, well, YouTube ads decreased year over year. That was bound to happen. But again, as I mentioned in the Meta video, there can be a huge tailwind for YouTube. What's that? The potential ban of TikTok. I'll repeat myself. I don't think it's a matter of if it will get banned. I think it's a matter of when. And also, obviously, on top of that, YouTube as a platform keeps on increasing as well, keeps on helping creators monetize their channels, whether it's through shopping, more monetization efforts, extra tips, thank you grants, whatever, you name it. Then Google search, well, that kept increasing. Google advertising increased a little bit. Again, the advertising market is in a down cycle. Once that's turning, well, these numbers should be increasing as well. But the most important point we should all take out of this current situation is that, yes, advertising is a cyclical business. And then Google Cloud, we saw here a big increase year over year, and that's great to see. But if we scroll down, and by the way, I don't know if you can see this number, but the huge increase in employees here doesn't really help the cause. But scrolling down here, Google Cloud still not profitable. Yes, it is still growing pretty fast, by the way, but it's still not profitable. Now, with regards to cloud spending, we can see here that cloud spending will reach nearly $600 billion in 2023. According to Gartner, they say that, well, end user spending on public clouds will reach over $599 billion, up from $421 billion in 2021 and nearly $500 billion in 2022. And probably by the end of this decade will be closer to $1 trillion. And when you are one of the top 3 players in the cloud market, well, the cloud industry, after AWS and Microsoft Azure, you will probably gain from that growth. And for those that are asking the obvious question, they can still increase shareholder value by obviously buying back more shares because, well, they have enough cash on hand. Or who knows, maybe they'll pay out a dividend because they do have an insane amount of money. And if they're not putting that money to use, why not, well, give it back to investors? Just an honest question. I don't know if they're going to issue a dividend anytime soon. Probably, in my opinion, not this decade. Same with Amazon. I don't see them paying a dividend anytime soon. And now if we go and look at the chart, I will have to repeat myself. I'm not a technical analysis expert. If you are and you want to comment on things I say, do leave it down in the comments below. Now, Google Alphabet obviously is down quite a lot from its highs. High was $150. Now we're under $100. Now, I'll explain a bit. This is the weekly chart. Red line, 20-day moving average, green 50, then the blue 200. MACD is still negative, but if we see some more green candles in the coming weeks, I have no doubt this will turn positive and, well, we might be going in an uptrend. Again, what you don't want to see is what we saw back here, where the MACD was green, but you can see here a clear rejection of the 200-day moving average. It tried, got rejected, and then we went down, 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 all the way below $90. This is why you need green candles, big ones that go over those lines to, let's say, have a, I wouldn't say insurance policy, but it's much better to have a big green candle crush that line than just barely go over it and then poof, getting rejected, and then you just go down again. And then, of course, because we got such good news, well, good news, inflation is still up 7 point something % year over year, but it's better than expected, then maybe the markets will continue to have green days. But a lot of things can change extremely quickly in today's market. So just because we got okay CPI numbers last week does not mean that right now we're back in bull market. No, far from that. We still have, well, in December, another meeting, and that will decide how we're going into 2023. 50 basis points hike or 75? 50 would be great. The market will probably respond extremely positive. 75 and bad comments, negative. 75 and good comments, meaning we're going to slow down the hikes. Great, we're going to 2023 with a more positive picture. That can certainly help the likes of Google because of the advertising, the spending, inflation coming down. Well, you would like to see inflation come down regardless of what happens, because that's helping everyone. And so that concludes this video. Obviously, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button, and I'll see you all in the next one. Bye bye.